Hello everyone, and welcome again to this edition of Property Perspective. So today I am still accompanied by Mathieu Arsenault. Hello Mathieu.
Hello Nancy.
Part of our team of economists here at the bank. So obviously with Mathieu we're going to have a discussion about what are the macroeconomic things that are happening that can have an impact on the decision to purchase or not a property. And we have a new guest today, Milan Di Giovanni. Good morning, Milan.
Good morning, thank you.
So Milan is a manager in our residential financing team. And Milan, you're going to help us understand the difference between pre-authorization, pre-qualification, and what are the advantages of doing that.
Absolutely, yes.
So Mathieu, there's a lot of things happening. And as we've seen, the Canadian real estate market is bouncing back. And you explained to us the last time that part of it is due to the growth of population that we have. But is the housing shortage still a big factor in this? And what will happen?
Yes, we discussed that, and it's still very strong at this point in time. When you look over the past 12 months, we mentioned that in our last edition, 1.2 million newcomers. But the increase in population, not directly newcomers, but the increase in population of 1.2 million. To give an idea, prior to the pandemic, the 5 years prior to the pandemic, it was 500,000 a year, and we were the most aggressive country among the G7 for population growth. So that's a big increase. Of course, this is unsustainable. There's going to be issue because there's not enough construction given that pace of increase. There has been coming back of temporary immigration student workers, temporary workers as well. It's going to decline, but the recent pace is still very strong. And for the remaining of the year, it's going to remain strong in our view. So on one side, you have interest rate that is high. And on the other side, you have the support for housing coming from this demographic situation. So that's the rebound we've experienced. One of the other reason, and it was generalized, as you can see, because population growth was really strong in all markets in Canada. So this is the four largest provinces. But the other reason is there has been decline in prices in several markets. So perhaps a couple of home buyers decided that it was a good moment to jump in the market. And given the rebound in resale activity, we also experienced a rebound in home prices. Here it's a bit of a complicated chart, but I really like it because it summarizes a lot of information. On the x-axis, that's the correction from 2022 peak to the trough, and the rebound we are currently experiencing since the trough. As you can see, the market that experienced the largest declines in prices during the increase in rates are currently registering very strong rebound, namely Toronto, Vancouver, Halifax, experiencing really strong rebound in the current context. So, like I said, it's going to be the impact, a tug of war between the interest rates, a headwind to housing, and demographic being a tailwind to housing in the next few months.
And we know that this summer we've experienced two interest rates hikes, which was a surprise for us. What do you think will happen from now till the end of the year?
It's a good question, and at this point, there's investor expecting perhaps another rate hike in October at this point. We are not in that camp. I think we think that the Bank of Canada should be very cautious at this point. The reason why they could go with another hike, I'll say that the inflation in July was a bit stronger than their expectations, higher than economists' expectation as well. But we have to keep in mind that inflation is a lagging indicator. Monetary policy impacts the economy with a significant lag, and the economy impacts the inflation with a significant lag. So when you look at economic indicators over the past few months, we are seeing clearly a slowdown. If you look at real GDP, It's still increasing. It doesn't seem to be a problem, but watch out. As I mentioned, population growth is so strong. When you correct it for population growth, so real GDP per capita, in fact, it's declining over the past 12 months, 1.7% decline. We haven't seen that a decline of this magnitude outside of a recession historically. So that's significant, and in our view, the Bank of Canada should be cautious that its tightening is having an impact on the economy. We are more numerous in the economy, but individually we're feeling the hit of those rate hikes. When you look at the labor market, same story. As you can see on the chart, that's the increase in the red line is the increase in population 15 and over. Significant boom. In the first, I'll say that in the last half of 2022, corporations were so in fact hired those newcomers at a very, very fast pace. There was a lot of scarcity of labor at that point, but you can see that appetite as declining, and over the past 4 months, unemployment rate has increased by 5 ticks. And it doesn't look on the chart that it's a big deal, but in fact, that kind of rise didn't happen outside of a recession. And more importantly, the central bank never raised rates when there was such kind of increase. So we recommend to be cautious and to wait to see the impact of what they already done, to see how the economy cope with the recent tightening we just got.
And also, I mean, the rates have increased, yes, but we also see the 5-year bond rate that has increased as well. And that's something that's very different from, let's say, what we had in January of this year. So can you comment about that a bit?
Yes, that's an important thing that we think that the central bank should take into account. Bank of Canada control short-term rates with the policy rates, but global factors are at play for the long, for 5-year rates, 10-year rates. And what we're currently seeing, you can see on the chart I'm presenting right now, the 5-year mortgage rate is at its highest since 2002. So in fact, yes, 50 basis point of increase on the policy rate, but larger increase on the 5-year rate. So it has an impact on business investment. It has an impact on housing as well. So what we saw recently, when we look at our housing affordability index, the mortgage payment as a percentage of median income, we've experienced an improvement over the past 3 quarters. That could explain the revival of the housing market over the first half of 2023. But given the rise in mortgage rates that we are currently experiencing in Q3, given the rebound in housing prices that we're currently seeing, there should be a deterioration in home affordability in the second half of 2023, and that's going to be a headwind for the rebound in housing at this point.
So Mathieu, again, thank you so much. Your graphs are so well done. They speak for themselves. You explain them very well. So thank you very much. And we hope that the rest of the year will remain with the same rate. And we'll talk again soon to see if we were right or wrong.
Yeah, it was a pleasure.
Thank you. Milan. So people still have the project of buying a house, even though the rates are a bit higher. So how can we know how much we can borrow? What are the tools? We'll talk pre-qualification, pre-authorization. So could you demystify this for us a bit?
Absolutely. Thank you, Nancy. A pre-approval is really very important. It's one of the integral processes for a mortgage financing process. Definitely, if you're new to the country, new home buyers, looking to purchase your new cottage, it's really going to help you understand your maximum borrowing capacity. And it's essential for knowing which type of property you'd like to purchase and what you can afford. Your borrowing capacity is used by lending institutions to establish your financial situation. It's basically a calculation, Nancy, that's going to help you understand your monthly debts, your monthly payments, along with your new mortgage payment. So it's definitely going to establish a clear picture on what can you afford and what is your global budget. And a pre-approval is also going to give you a better competitive advantage because it's going to let the sellers know that you are serious to make that home purchase.
That's very interesting. And now that I know, based on the debts I had and what the debts would be if I'm purchasing this new house, there's also people talking about pre-qualification. So what does that mean, and what are the advantages of getting that pre-approval compared to pre-qualification?
That's a very good question, Nancy. Absolutely. A pre-approval is a document that's going to certify your maximum borrowing capacity. It doesn't necessarily guarantee that you'll get the loan, but it does establish your buying power. But please do keep in mind, like you mentioned, a mortgage pre-approval is not to be confused with pre-qualification. Both are very different. Pre-qualification will give you a borrowing capacity, but it's not going to guarantee the loan and it's not going to protect your interest rate. So the best to do is to have a pre-approval because it's going to include something called an interest rate guarantee. This is going to allow the homeowner to pick a favorable interest rate and they can lock it up to 180 days. So this is very beneficial to go ahead with a pre-approval. Again, not to be confused with a pre-qualification. And in addition, Nancy, I would say that a pre-approved buyers definitely have a much smoother and nicer process when closing their property because most of all their financial documents and application is already in process with the bank. So definitely they'll have a much smoother and faster experience. And they'll definitely have negotiating leverage because when they are purchasing their home, the sellers will know that they've come with their pre-approval in hand and it'll give them a definite edge with their purchase.
Okay, so if I summarize what you said, pre-qualification would be when I'm thinking of buying a house and just figuring out high level how much I could borrow.
Exactly.
But then getting serious into the project, I go to my bank.
Yes.
I get the pre-approval, which will take into account what I have in debts right now and payments, what I can borrow.
Yes.
I'm going to have a document that I can show to my future vendor so that I'm credible.
Yes.
And the bank will guarantee up to 180 days of the rate,
interest rate
which
lock.
is very important if we have another rate increase this fall.
Absolutely.
Okay, so thank you for making this so simple. And I hope this brought new color to those terms that are very often confused. And please don't hesitate to come and see Milan's teams so that you can have this pre-approval with you. And Mathieu, thank you again for sharing all your knowledge. I hope you enjoyed this capsule. Thank you.